right, welcome to the Closing Beat, everybody. Happy Thursday. I got the day right today. If you're joining us for the first time, this is just a quick stock market update show that we do for our customers as well as for those of you guys that want to watch. We're financial advisors here at Jazz Wealth. Hope you'll check us out at jazzwealth.com. You can schedule a call with us to chat about anything we can help you with. We manage our own portfolios, by the way, so we're very engaged in what the markets do. We're not active investors. We're just actively watching. We don't go and invest your money and then play golf. For our customers, tonight we have our class, our portfolio update. Got a lot of good things in there for you, putting the final touches on some of the studies that we're doing. And so that'll be tonight, 8 o'clock. You should have the email. If not, let support@jazzwealth.com know. If you're one of our customers, we'll be able to get you in there. It's also recorded in the dojo, which we show every day here on this show. And hey, if you have a moment, not going to even ask you to subscribe. Play our game. Bottom right-hand corner of your screen, you see a game. It's called Guess the Dow. Just a little fun we're having. You have up until tomorrow to guess where the Dow will close next week. So it's a 1 week in advance game. There's no like spam marketing. There's no catch or anything. Anybody can play. And whoever's closest without going over, we'll send you $100. It'd be a gift card. If you're one of our customers, you could choose to take the gift card or have us credit your account $100. So it's free to play. It only takes a second to play. Remember, you're guessing next week's closing price for the Dow, and we'll have some stats on that soon. I'd love to use this to share with you guys how bullish you guys are, how bearish, and sort of the ranges and everything. So that's that. Anyways, let's talk about the markets today. You got the Dow higher by 184, S&P 17, and NASDAQ up 40. The markets really started sort of calm today. I mean, it was a little higher. It was like fine, 50, 60 points on the Dow, pushing 90 at moments there. Everybody's still thinking that Fed's going to cut rates. That's it. Like they said the other day, 13 Fed members out there speaking this week. And although they never actually said they would cut rates, everybody still has that mindset. By the way, if they did cut rates either in the June or July meeting, or by the end of July, really, it would be the shortest gap in time between a rate hike and a rate cut in history. Right now, 155 days sets the record. You got to go back to 1995. Anyways, the Fed, not even saying they're going to cut rates, but we're all thinking that, I guess, and so the market's headed higher. Anyways, right in the middle of the day, we get a report that the White House is considering delaying tariffs. So the market shoots higher. You have the closing prices that you see on the right-hand side of your screen. The White House conveniently waits till after the market closes and then says, we never said that. We still plan on proceeding with the tariffs as expected. Right now, there's no deal. Isn't that convenient? They waited till the market's closed. So after hours, we've sold off a little bit here. The meetings, the negotiations are continuing here at 5:30. So you got another half hour before that starts there. My real thing here is, will Trump use this recent bounce here in the markets to slap additional tariffs, the remaining tariffs on China, since that's really going nowhere? That's kind of my assumption. Just a fun game. I'm not saying to bet on that in any way. I just think it's kind of interesting that if he does get that pop, maybe 290 or so on the S&P, I think he would probably say, all right, let's now put the rest of the tariffs on China. We can afford it. Anyways, so that's the market for today. Here's the S&P on the screen. If you're one of our customers, you can follow along in the dojo. This is the dojo. Just go log in there. You can see we've bounced back above here. We're actually, we've got two interesting studies to share tonight for our customers because there's some very interesting things that just happened in the last week and 1 day. So we're going to cover that tonight. What you need to know if you're just watching, you just like tuning in, the S&P has moved about 4.5% up off of its lows. This is why you don't run away when the markets fall, right? This is why you participate in the dips. I got so many calls between today and yesterday of people saying, Dustin, do you think that's the bottom? Should I buy now? Because I was out. And do you think I should dive in now? Don't put that on me, right? Why should I guess where I think the markets are going to bounce for you? This is why you buy the dips. Notice how the markets fall, drive you crazy, right? All down through the month of May, like, oh, come on, man, bounce a little bit. And when they do bounce, it's like an instant snapback. Everybody dives in going, that must be the bottom. So don't fall for that. If you're feeling like you've been left in the dust, remember that happened back in December as well. You got left in the dust. I'm not saying the markets go higher from here. I just find that interesting. All right, if we look at the NASDAQ, by the way, the S&P, we're just a few days into the month. So we look back, it's the 8th best start for the S&P in history. You look over the entire history. So is that good news or is that bad news? We're going to cover it. We'll let you know tonight, finishing up the studies here. So the NASDAQ looking good as well, up 5% from the lows. So pretty nice little rally there off the bottom. Now tomorrow we have the unemployment rate. Comes out, we're expecting 3.6, right, is the estimate. 3.6% unemployment rate. It's not entirely factual, but I don't want to be one of those guys that's like they're lying to you or whatever. Anyways, 3.6 is going to be the expected reported number. Now, we have non-farm payroll numbers coming out as well. Remember just the other day, ADP numbers came in way less than expected. They missed by over 100,000. So what we did is we looked back and we said, does that matter in any way? If ADP numbers miss by that much, do non-farm payrolls come in any weaker or more positive? What's the unemployment rate? There's no correlation there, so anybody that tries to steer you in that direction, they're not really helping you. Russell 2000 refuses to participate. That continues to be a warning, I think, in general for the overall markets. I've said it so many times. The markets attempt to rally, the Russell does not. The market sells off, the Russell does, right? So it's really still holding back that weakness there. You still have over 50% of the S&P 500, which is positive by 10% or more on the year. So most of you that just tune in for a little bit, you're not really scared, right? May sucked. That was unfortunate. The markets had to fall. But you still see a lot of positions that are positive by double digits if you happen to dig into your portfolios. And so that's awesome. Nobody's really going to be too worried about that anyways. As far as stocks above the 50-day moving average, Monday we had 28% above moving average. Massive Tuesday, 2% rally. We shot up to 38. Yesterday we were at 45. Today we are at, it's just above 50, almost 50. It's 49.1 to be exact. So continuing to rally there just shows you that most of the stocks that did fall below the 50-day, they didn't go very far below the 50-day, just a little bit of a break, and now they've sort of recovered. You had 79 52-week highs in the S&P 500 today. It was a good mix. 25% of those stocks were financials in the broad sector, right? I'm not saying just the big financials, the broad sector, 25% of those, and then utilities Utilities came in second place. About 18% were utilities. They broke out to new highs as well. Maybe we'll cover that in a second. There were 4 new lows today, new 52-week lows, all retail, or almost all retail. Macy's, Nordstrom, and the like, just getting beaten. One thing that's not getting beaten today, oil. Oil finally recovered. That's been selling off very aggressively. The number of stocks that are under the 50-day moving average is next to none in this category. So, very much oversold in the short term is kind of the short answer there. You got a nice little rally today, just traders trying to pick the bottom a little bit, seeing what they can do there. So far, so good. Semiconductors continue to claw their way back. This is not the type of bounce, by the way, that just recovers in a straight line. So if you're in the semiconductors or you like the sector or this ETF or something similar, this is not the type of bounce where you'll just see it go straight up and pretend like nothing happened, okay? We could probably do a video or a class on that one. And really a lot of what happened today, AMD was your best performing stock in the S&P 500. It was upgraded, added about 8% on the day. The the AMD, this stock, makes up about 5% of the SMH. So hopefully that helps today. And it did. I mean, it helped the semiconductors there. Tech stocks doing well. There you go. Now 6.5% off lows after stopping there at the 200-day moving average. So a nice sort of quick recovery there, expected out of the tech stocks, but you get the gist there. You got consumer staples. Remember we talked about this last week, getting beaten down like out of nowhere. End of the month, they got beaten down and immediately recovered. So you now get the impression a lot of people just sort of shoring up their end of the month statements there. And the selling was not because of any fundamental beliefs or technical beliefs or economic beliefs. It was simply just profit taking into the end of the month. It has since recovered. Really nice rally there in the consumer staples. Healthcare, got to point out healthcare here for you, officially breaking the downtrend. It's not perfect, but if you use the little hidden tool there in the dojo, you could draw a little line here. We've been pointing this downtrend out for some time now. Unable to break above. Today officially closes above. The problem now is it's got the 200-day moving average, but I'll still consider that a win. If you're looking for the healthcare area to recover, that's not a beautiful recovery, or at least a start to it, but it makes you pay attention now. Now you look at it and go, maybe we're onto something. Remember back here, we broke up to the trend line. We said, maybe we're onto something. Let's wait. Nope, not yet. Maybe we're onto something. Nope, not yet. Maybe we're onto something. We've got the 200-day that people are going to be paying close attention to. And I said, like I said already, retail, one of the weaker areas. Not bad today. A lot of these names just unfortunately very weak. Some of the weaker names that are in retail and also in the S&P 500. Limited Brands lost 4%. Capri, that's Michael Kors, down 3%, not looking good. We did Nordstrom, we did Macy's. Gap down on the day, 2.5%. These are some of your worst performers. And Best Buy, not as bad, but still 1.5% down on the day. So that gives you a brief overview of sort of the markets, the sectors of the markets, and individual stocks if you're digging through those things. I guess we got to cover Beyond Meats. Their first earnings report as a public company, they were expected to lose 15 cents. They lost 14 cents. That's called beating the street by just 1 penny, made famous by Mr. Phil Grandy down here in Florida. Anyways, revenue came in at 40 million versus 38 million. Okay, right? A little bit better than expected. Got a lot of good things going on there. Just check the valuation on this company, right? The stock is severely higher here after hours. I mean, there's no arguing that that's a bullish, good move for those that are invested in it. But just, I don't know, if you've never looked at valuation before, we're trading at about 118 bucks on this stock. Closes around 100, trading at 118, very much some new highs there. Just, I don't know, company makes 40 million a quarter. Let's say they continue doing that. Let's say they grow by 10% quarter over quarter. Does that make them worth now, what, 8 billion? $8 billion? I don't know. I'm not saying, I'm not saying one way or the other. I'm just sort of questioning it. Tesla recovering off the lows. It's been a good 3-day streak here for Tesla. There was a report that came out that they're going to sell or are shooting to deliver, not sell, deliver 33,000, was it? 33,000 total vehicles this month. So, the focus has been on cutting costs there and, of course, getting deliveries up so people can see that maybe things are going to be consistent. So shares were higher there. That was kind of interesting. What Costco finished doing on the day here? Little gain, back to highs here for Costco. 4.2% increase in store sales. Costco's just been killing it lately. Sadly, we don't have one by us. Five Below reported earnings, raised their guidance and everything. It was back and forth. People just trying to dissect what's going on here. They now are reporting the impacts of tariffs in their earnings, so that'll help going forward, but it left a lot of people sort of confused today, like, well, this is the first time, so how do we know how this is going to impact you in the future? So naturally, everybody has an opinion, and you could see that nobody was willing to make up their mind really one way or the other. This stock was back and forth, just kind of messy there. Lazy Boy, yeah, it's a public company, down 12% today. Sales have slowed down there. People are not buying as many Lazy Boys overall, a lot less than they were, so stock price lower. Stitch Fix did well. Stock was higher by 15% today. They beat on earnings, they beat on revenue, they raised guidance. That's like the holy grail of earnings if you pay attention to that kind of stuff. When you beat on all three metrics, then you can dig deeper and look at all the other stuff. But investors very, very happy with that. Second quarter in a row that they beat on earnings, beat on revenue, and raise their guidance going forward. That's 2 quarters in a row, and naturally you can see what happened last quarter. Very strong there. Still expensive to acquire a customer if you happen to like paying attention to this sort of thing, but all in all, they did well. Stock higher by 15% on the day. So tomorrow, non-farm payrolls expected to come in around 180, exactly 180. Unemployment rate 3.6, what we're looking for. Wholesale inventories coming out. That'll probably get a little attention just because those inventories been rising a little bit. It's not a good sign. If GDP is growing, but inventories are growing too, that just means that we're producing more stuff than throwing it all on a shelf, but nobody wants to buy it, or less people want to buy it. So that's a really oversimplified way of looking at it. Please don't bash me for not getting more specific. You got one more Fed member speaking tomorrow, so we've knocked it out. They had 13 Fed members speak this week. He'll be in Asia? He'll be in Singapore daily. He'll be in Singapore, so he speaks like I don't know, it'd be like midnight Eastern time that he'll be talking. So it's not technically, I mean, it's tomorrow, just whatever. So there's one more Fed member talking. Couple conferences that we mentioned earlier in the week, that's wrapping up. From the healthcare side of things, it's been exciting. Naturally, healthcare got a boost, but not a lot of big breaking news coming out of the conferences. I've been watching. Dividends, you got Travelers and Anthem, both of which we own here at Jazz Wealth. So you got dividends paying out 82 cents and 80 cents, not paying out, but it's ex-dividend date. So we'll point that out for you. And I think the rest of the stuff is in the scroller below. Yeah, I believe so. We did it. I'm going to put our attention now on the class tonight, make sure we have the goods for our customers, let you know how things have gone and what the market's doing, and always, of course, a good study in there. Nice. Harry says, give us a positive week, man. The Dow is on track to break its 6-week losing streak as of now. Anything is possible, but you know you'd have to fall like 3.5% tomorrow, which I'm not saying is not possible, but would be extremely, extremely rare for the Dow. Very, very rare. Remember, the Dow's only lost 7 weeks in a row 7 times in its entire history. Go back to like 1899, really, the end of 1899. Only lost 7 times, 7 weeks in a row 7 times, and it's only lost 8 weeks in a row once, one time ever in history. So it looks like we're going to break that streak and get away from that. So that's good news. That's good news. Yeah, financial investor, you said it better. So the dividend is actually earned at this point. It does not, there's different pay dates depending on them. Maybe I should change the data and we'll talk about the day we got paid. I just like knowing, I just think it's cool. Cool. You're starting a new job at Microsoft. They offer a Fidelity. Yes, they do, a Fidelity 401k. Any tips you should know before opening up one? No, I mean, there's no like gotchas or anything with those. If you're going to participate, hopefully, I know Microsoft matches, but depending on whether how you're classified at Microsoft may affect your match. So double check that. They're pretty good there, though. It's weird how Microsoft has so many categories of employees. Google too, or Alphabet, whatever. Yeah. What does the trend line show for SKT 50 200-day? Looks like SKT. There you go. 1 second. So this is the REIT. These guys are everywhere down here, by the way. Tanger Factory Outlets, if you want to follow along. Your question was what? Oh, the trend line. Okay, yeah, let's go over and take a look. So it's not perfect on this guy here that I can grab this and dial it in. But here's where people look at. You got most recent high all the way down here, right? So you're basically following the 50-day at this point. That will change. That'll 100% change. And then you have your accelerating downtrend here. So what we used to teach here was if you're aggressive, that's your first moment that's your first moment in time right here. If you happen to get a reversal for some reason right in here, that's your first moment to take a shot. Ideally, in the way we used to have a strategy for this, we would say, okay, it doesn't look very good right now. If it sells off aggressively, you take some of your position and play the falling knife game. Take 1/4 of what you're thinking about using here, play the falling knife game. When it rallies and goes over the first trend line there, take another piece of your position, add into it. You can look for a higher low then to add the third piece, and then the final piece would come over the big breaking trend line there, the massive one there. So it gives you a chance to sort of step in or average in respectable areas, without saying, oh, it fell, it's a great discount, buy, and then it drops another 20%. You get a chance to just step in. If for some reason you buy and it goes sideways for a while, well, it's 1/4 of your position. You're not really too, frustrated by it, You think we're one Trump tweet away from 3% one way or the other. What do you say? Yeah, you're probably right. Uh-oh, Kevin's looking at a Tesla, man. He's going to dive in. Done any videos on how to analyze chart patterns? You find yourself drawing lines but never wasted... No, I don't think so. No reason I couldn't. They would be long videos if I did. I really, really love talking about that stuff. No, actually, so the short answer is no, I don't think so, Mike. Consistency, Jay. Why are people so bearish on Tesla? It's consistency. Are you going to make a profit, or are you one day away from going bankrupt? That's the way Tesla is perceived right now. You think about it. Would you invest in Coca-Cola if they were making a profit one quarter, then they didn't make a profit, and it seemed like they were going out of business? You wouldn't play along. So it's just a tough one there. They're overvalued as well. I mean, we could argue that one, but that's most of it's consistency. There's just no consistency to that company. People don't like to be surprised. The markets always get volatile because of uncertainty. They stay, like January through April, they stay in uptrends or downtrends or whatever when there's certainty, right? We know what's going on. We're cool. Notice how all that time passed and everybody was just fine, little rumors here and there, whatever. And then all of a sudden you go, boom, this thing's getting out of control, trade and rates and everything. So it's just consistency. It's simple as that, I think. Any thoughts on Google? No, I really don't look at this stock often. I don't know enough about it. I like that it's fallen the way it has. I just don't pay close enough attention. There's so many variables and different business ventures these guys have. Other bets I think are interesting if you like looking at those sort of things. They own all kinds of great stuff. And then they bought somebody else today. That's just a tough company to analyze. You know what I mean? I'm not that good. I've never even tried. You think the short covering's coming on Tesla? Cool. Yeah, I mean, it could probably see part of that the other day, 2 days ago. Unstable, yeah, might be another way to say it. I feel bad. You know, you like the guy. Seems like the kind of guy you want to cheer for. Yeah. But anyways, that's it. I think I'll wrap it up. Don't forget, play the game. A lot of you, by the way, are already playing the game. Thank you. I mean, that's great. It'd be a lot of fun to play along, but I did not expect so many people wanted to play. So, like I said, there's no catch, right? We'll $100. We just keep it going week after week. That's all I have for you here today. I hope you have a great rest of your day. If you're one of our customers, we'll see you in a few hours here for our update. Got some goods there for you, and if not, we'll be back tomorrow. Do this all over again, and yeah, enjoy. See you.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.